Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
Hello, everyone. This is Mark Trice. Just wanted to give our clients a quick update on the recent volatility in the markets. On Monday, the Dow plunged nearly 1,000 points, after also dropping on Thursday and Friday of the week before. Sudden surges of market volatility like this can be very unnerving. But unfortunately, the solution is simple. We determine the causes and then put them into context. So in this video, I'm going to take a look at what's going on, why, and what it means for the future. A single report or piece of data, sometimes that's all it takes to set off a chain reaction in the markets. In this case, it was the latest U.S. jobs report, which showed that the economy added 114,000 jobs in the month of July. That's much lower than what economists had expected, and it contributed to a sharp spike in unemployment. The jobless rate is now 4.3%, which is the highest it's been since October 2021. As you know, the Federal Reserve has been keeping interest rates at their highest levels since the early 2000s in an effort to tame inflation. The most recent inflation data suggests the fight is working. As of the end of June, the inflation rate was at 3% compared to the same point last year. That means we are getting ever closer to the Fed's stated goal of 2% inflation annualized. It also means that the investors have been expecting the Fed to start cutting interest rates in the near future. That expectation is a big part of why markets have been up for most of 2024. So why the panic in the markets now? Well, high interest rates bring down inflation because they cause people to pull back on borrowing and spending. In response, though, companies lower prices in order to keep generating new business. So far, this has happened without much of a hit on the economy, but it appears that's now starting to change. Companies have slowed the pace of hiring. Economists have been expecting this, but the sudden jump in unemployment now has investors worried that the Fed waited too long to cut rates. The concern is, even if a rate cut happens in the next month or two, unemployment will still continue to rise and the economy will enter a recession. Now, this is fear that's out there is the main reason behind the sell-off we've been seeing in the stock market. This is a natural reaction to an unpleasant piece of data. But savvy investors know that fear and panic are never good reasons to make a decision. That's why it's so important to put all these events into context. For instance, a 4.3% unemployment rate is not particularly high. In fact, historically, it's extremely low. Furthermore, most data shows that the economy is actually in good shape. Our nation's gross domestic product grew by 1.4% in the first quarter of the year and is projected to have grown by 2.8% in the second. So, by almost every measure, we're still some distance from a possible recession. When you combine this with the fact that inflation has been falling, there are a lot of reasons for optimism. That said, market volatility can take some time to subside, and historically, the months of August and September are often the most volatile months of the year anyway. For these reasons, we do need to be prepared for the next several weeks to months to be turbulent. In the meantime, though, remember that market turbulence is a normal part of investing, and that doesn't necessarily require a change to our long-term strategy. As always, my team and I will continue to keep a close eye on the markets, and if you ever have any questions or concerns, please feel free to reach out. You can reach us at 254-282-0495. That's 254-282-0495. And remember, we'll always be here for you. Have a great day.